All right, guys, so this video will be an in-depth video of what I trade, how I trade it, the apps that I use, everything. This will have everything inside it. Over the last 2 years, I have lost, won, spoken to 7-figure traders. This is everything in one spot. This video could be half an hour, it could be an hour, but for the 1% of people that will make it to the end, that will get a notebook out now and that will write stuff down and actually journal it, this video is for you. Now, first things first, what I will say is, I know this might get a few views here and there, whatever the case may be. There will be a small margin of people that actually follow through with trading. And what trading is shuffling all your chips. You're all in, okay? If you're not all in, then there's no point even starting. I'll tell you that now. You can't half-ass this. This is one of those things that you have to sort of dedicate yourself to, and you have to be all over it. I remember I literally spent my lunch breaks, I had 2 jobs, and I spent my lunch breaks on both of those jobs journaling trades, learning how the market moves and why it moves that way. Market moves for reasons. It moves with purpose. It moves with trying to get somewhere so it can go somewhere else. It's always doing something for a reason. It's never by luck. So once you sort of understand that, hopefully this video can moderately help you a little bit. This is just what I trade. I'm not a teacher, so I'll try my best to explain it. Without further ado, we'll jump into it now and we'll just sort of go through everything that I sort of use for my trading. Obviously, my YouTube is Monzo FTP and my Instagram is Monzo FTP. Now, if anyone has any questions, follow or send me a message, whatever you need to do. Send me a message on Instagram. I will never charge you for advice. I will never charge you for trying to help you, okay? I want to see people win. This is one of those games where everyone can win if you just lock in, okay? So lock in, dedicate yourself. But yeah, this video here will have my whole 2-year experience of trading, all my losses, my wins, my experience, my talking to 7-figure traders and what they sort of think on the market. Okay, cool. We'll jump into it now. So this is how I trade using areas of interest. In this video, we will be understanding what an order block is, a fair value gap, inverse fair value gap, breaker structure, change of character, and a liquidity sweep is, and how you can sort of put that into use for trading. So the app that I use to trade via my phone is called MetaTrader 5. If I believe so, you can also download it on the laptop, whatever. I think it's easier via phone. The reason I use MetaTrader 5 over MetaTrader 4 is strictly because it's just a more updated version. It's more of a preference situation. You can use MetaTrader 4, you can use MetaTrader 5, it's completely up to you. I just prefer MetaTrader 5 and that's just what I trade on. So MetaTrader 5 for the iPhone or whatever phone you have, and this is for taking trades. Now, TradingView is where you do all your analysis. So if you are lucky enough to have a laptop, I would personally use it on a laptop, obviously a bigger screen. I've got a monitor. I'm fortunate enough to have one. Oh, sorry, pardon. Yeah, I use my monitor because it's a bigger screen. My analysis becomes more tight. It becomes tighter than it would be on a phone. But if you do have your phone and you don't have a laptop or a monitor, you are still able to use TradingView on your phone. Just when it becomes time to analyze a chart, it may be a bit more tedious, but it is doable via phone. So TradingView, MetaTrader 5, these are the 2 things that I use pretty much. Obviously prop firms as well. I'm with a prop firm called FundedX. No, this is not a paid promotion, but I think they're guaranteed like good payout time, good rules behind their funded accounts, 2-step, 1-steps, instant fundeds, everything like that. Before we jump into everything as well, I'll drop some advice on you guys. You are going to lose. When you step into trading and you've got no clue what's going on, MetaTrader 5, demo account, get used to things, get used to buying, get used to selling, what lot size, everything to do with that. You won't wake up and have $1 million in your account. That's not how it's gonna work. Trading is more of a step-by-step. I'm gonna build it. I'm gonna build whatever I'm making here. A lot of people think that overnight you can just make a mill, whatever your case may be. That's not the case here. It's gonna be a hard graft, but like I said, if you're all in, it will pay out. And one day you'll be looking at the charts and it will all just click. One day it just made sense to me. I'm not sure how it worked or why it did that, but one day everything just started falling into place and it made a lot more sense. So stick at it, keep going with it, and we'll get into this now. So what is an area of interest? An area of interest is a price where zone where I expect price to react from or to. So large price movement, explosive price movement, and multiple reactions. So you're talking your highs and lows, and roughly normally it'd be around the middle mark, but where price is rejecting highly or it is like continuously going to at that level. All right, so that is my area of interest. Now, what is an order block? We're going to go through all of these step by step, and then over here I'm going to show you on the actual charts what the case is. Okay, so what is an order block? An order block is the last opposing candle before a strong impulsive move. It represents institutional buying or selling, unfilled orders, smart money positioning. So a bullish order block is the last bearish candle before a strong move up, and a bearish order block is last bullish candle before a strong move down. How an order block is created: an order block is formed when price consolidates, a strong impulse move breaks structure, the last opposite candle becomes the order block. That is literally it. Okay, obviously we have like a little example down here. It becomes valid after a break of structure. Don't worry about too much. This is more so you can validate that sort of trade. It's just a confirmation to make sure that your trade is an A star compared to an A. That may influence how much you're willing to risk on the trade, stuff like that. Okay, so don't worry about this too much just yet. We can also get into that. But so look, here we go. This is a bearish scenario of an order block. So price will come up, retreat back down, and then this leaves the bottom of the candle to the top of the candle. This would be your order block. Okay, cool. From here, you would have your entry here, your stop loss probably about 10 pips above. Price would go bullish into this and then reject, coming back bearish, continuating that trend. Same thing here, up, down, down, up. Wait, down, up, down, up. So it continuates that trend. It just gives you a better buy point, you know? So on the chart, price break structure, returns to order block, then continuates in the direction of the trend. What is a fair value gap? It's an imbalance in the market. So what happens here is there's a strong move leaves a gap between two candles. Sometimes there is multiple fair value gaps. The first one I would always say is the most valid one. That's just like a little point that I've picked up on. The first fair value gap that is created within the market is normally the one that price retreats to. So this is caused by aggressive buying or selling, inefficiency, and basically price may return to fill the gap. That's long story short what it is. How fair value gaps are created: strong impulsive candle leaves imbalance, price often retraces to rebalance. It mitigate positions and then enter at better price. So that's basically how you use it, whatever. What is a fair value gap in trading? Yeah, everybody go on this. This is what it is, pretty much. It's a bullish move or a bearish move. Say we're on our way up and we're making bullish moves and the market's going up like that. It may jump and leave a gap. Price may return to this before continuing that trend. Same coming down. If it's coming down and it makes this gap, you can draw your box here, and then your entry will be here. Your stop loss probably 10 to 15 pips above, and then you can continuate that trend once the fair value gap has been respected. So notice a strong move, clear imbalance, price retraces into the gap and then continuates in the same direction that it wants to go. What is an inverse fair value gap? So an inverse fair value gap is the exact same as a fair value gap, so the exact same structure. A gap will open up, but instead of respecting this trend, it will break it and then tap on the opposite side to start a reversal. I'll show you obviously the photo. So this happens when a bullish fair value gap gets broken and becomes a bearish, or a bearish fair value gap gets broken and becomes a bullish. It flips bias, it acts as a support turning resistance, resistance turning support. So what will happen is, normally, if it was a fair value gap, price would come down, it would tap into this fair value gap and then come back down. Continuate that trend. What this is basically implying is a reversal. Comes down, breaks that fair value gap, taps back into this previous fair value gap, now making an inverse fair value gap, so it's inversed, and then it will continuate in that direction. So just a reversal, more of a confirmation. There's other things you can pair with it as well. So when price breaks through a fair value gap, it becomes a new area of interest in the opposite direction. All right, so we've got our fair value gaps, order blocks, and inverse fair value gaps. That's what we've covered so far. Obviously, if you guys are journaling this, writing this down, please stop the video. Make sure that you're I do speak quite quickly because I don't know why actually, but yeah, that's long story short for that one. I keep saying long story short, it's doing my head in. A new saying, wow. What is liquidity? Liquidity, stop losses resting above highs and lows. Retail traders place stops above equal highs, place stops below equal lows. Institutions target this liquidity because there's big buy or sell orders there. What is liquidity sweep? Liquidity sweep is when price takes out previous highs, lows, triggers stop losses, then reverses. What I mean by this is if you have previously traded and you set your stop loss, we'll go back to a fair value gap for some reason, okay? We'll go back to here. So we think a fair value gap is going to come up here, re-enter here, and then continuate that trend, okay? Through the video, you can hear me say 10 to 15 pips below, okay? The reason being for this is if you see a fair value gap in a bullish trend, the likelihood of everyone else seeing that fair value gap is nearly 100%. Everyone will be having an enter here, an entry here, and a stop loss here. What price will do, and this has happened to me many times, I had to learn this the hard way, is you feel like price is targeting your stop loss. In terms, it will come down to your stop loss, it will stop you out, and then continue to your take profit. All right, so why this happens is because everyone else has put their stop loss in the exact same spot. Okay, everyone's put it on top of this first candle wick, creating this fair value gap. It will take everyone out, fill all orders, and then shoot back up. Okay, so that's something to look out for. Always be a bit generous when it comes to your stop loss, okay? Because if your stop loss is here and your stop loss is here, you can still lose $200 if you just change your lot size, okay? So don't be greedy and be smart, because that's how this game is played. It's played by percentages, okay? So this is a quick show of liquidity. Don't worry about this one here too much, but long story short, liquidity, 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 a sweep of liquidity, okay, and then a push in a distribution type format. Same thing here, liquidity taken and a push downwards. You'll notice equal highs and lows, spike above, below, immediate reversal. So that's the trap, reversals, pretty much. This can also be paired with a inverse fair value gap, because a price pushes up and then drops and then returns to a price. I guarantee you on the left side, on the bullish market, there would probably be a fair value gap waiting there for you. So always keep an eye out for inverse fair value gaps and liquidity sweeps. All right, so a break of structure. These ones will be a bit quicker because I'll show you more so in the charts, but a break of structure confirms continuation. In an uptrend, higher high is broken. In a downtrend, lower low is broken. Break of structure, trend continuation, confirmation. So this is basically saying that the market's bullish or the market's bearish. It's just the lows or the highs being taken out continuously to show that it is still going in that direction. Obviously be careful of liquidity like we spoke about, but it will make sense later. Change of character, early signs of a reversal, liquidity sweep. It happens when market fails to make a new high, breaks previous structure in opposite direction, normally followed by inverse fair value gaps, yada, yada, yada. Change of character, potential trend shift. All right, so what I mean by this, pretend this is a straight line for now, but we're going in a bullish market. These are called high highs and these are called high lows. So we're making a high high, high low, high high, high low, high high, high low, and then we're making a low high and a low low. Okay, so this is the change of market. Normally price would potentially react around here into an IFVG and then keep tanking downwards. These are where you would find fair value gaps to continuate the trend upwards. All right, so how I implement all of this into a trade. So I identify higher time frame bias, which I'll show you, wait for liquidity sweep, mark out confirmation, order blocks, fair value gaps, inverse fair value gaps, enter on retracement, target next liquidity. So that is literally it. Obviously what I can do is I can put this document in the comments below the YouTube video and you guys can have a look at it yourself. sort of write it down, whatever you need to do. But this is my trading model. There, that's it. Obviously, there's a few more things that I take into consideration. All the news throughout the week, I will put into literally just ChatGPT, and I'll say, how will this affect so and so currency? So I trade stuff to US dollar. Hypothetically, normally moves in the same direction because it's against US dollar, and US dollar is quite a strong currency. I trade AUD USD, Euro USD, GBP USD. Sometimes gold, but that's been fluctuating a bit lately. So when you don't know what's going on, don't trade it. Simple as that, all right? So the most important part, this is 100% the most important part out of everything that I've said so far, is the psychology, okay? Because if you can't control your trades and your emotions, you will blow funded accounts, you will lose all your money, and yada, 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 okay? You will never become a profitable trader if you cannot control your emotions. In saying this, start of last week, Monday, Tuesday, Wednesday, I think I was about $600 down on an account where I can only lose 2.5K in a day, okay? So I didn't overtrade. It was good trades that I thought were going to win, but there was news that I forgot to check, and I suffered from that. That's what got me. So that's on me. I've learned from my mistake. So instead of me saying that I've lost $600 or I've lost so and so percent, I can just say I've just paid $600 to learn, check news, okay? You are going to lose. I'm going to tell you this now. You will lose, 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 win, 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 lose, lose, win, lose, lose, win, 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 okay? So be prepared to lose and be prepared to take that on the chin, okay? Because it's not gonna be, you're gonna jump straight in, it's gonna be super simple. It's gonna be complicated, it's gonna be hard. That's why I put my Instagram there to ask questions. If you need a bit more understanding of some things, I'm happy to teach you guys. Do you know what I'm saying? I'm not one of those guys that's gonna charge you. I think everyone should be able to do this. I really enjoy trading. I've got a mad passion for it. So this is like one of the things that I want you guys to understand, the psychology behind it. Get your mind right in terms of, if you can't make your bed every morning, then how would you expect yourself to have a proper trading format in terms of don't revenge trade and stuff like that? So yeah, just make sure your psychology is good. People lose after knowing every concept because of fear, greed, and patience over trading, professional mindset, professional thinking, and probabilities. They accept losses, protect capitals, trade less, wait for A+ setups. Trading is a long-term game. That is the main things. Long-term game. Picture long-term. All right, let's jump into the charts. This is gonna look like the inside of a Mercedes A200 as soon as I open this up, okay? Bang. You guys won't understand really what's going on if you're new to trading. If you're not, then good on ya, good on ya. So, what I can see, I am on a 4-hour time frame. This is my bias. What can I see? I can see we are in a bullish trend. We have made higher highs, which weren't even contested. Higher highs, higher low, higher highs. This then broke structure. Did it even break structure actually? Let's have a gaze. This then broke structure just briefly, but what fell below that is liquidity, okay? So it failed 4 hours, 4 hours, well, 4 hours, 4 hours, 4 hours. So over the space of 12 hours, it has failed to close below here, which would be my incentive for a reversal. Is gonna fall, the market's gonna fall, it's gonna start making lower lows and lower highs. But it didn't. So what I'm looking at now is, okay, cool, we can start looking at buys. Here we can see this is where the reversal obviously happened. I'm not too fussed about the 1 hour at the moment. I'm looking for buys at this point, and we can play it out. But what I will say on the 4 hour is I'll show you this. All right, so I'll come into here. My areas of interest. Where do my areas of interest lie? Pretty much, areas of interest will lie, because it continuates from about here, going across. This will be my area of interest, because if I go to a line chart, continuously, area has reacted roughly around this mark. Obviously, if you wanted to be sort of more anal about it, that could be your area of interest, and you could probably Probably don't even need to bring the left one in because that's pretty invalid at that point. But you can see here on a line graph, because this is where price is closed. Okay, cool. This is my area of interest. Price is consistently reacting. Up here, we have our highs, consistently reacting. And then obviously as well, down here, consistently reacting. All right, now we have this. We're gonna go into our 15-minute time frame and we're gonna let it play out for a second just to see if we can close above London and New York previous highs. As you can see here, we have the highs of Asia session and we have the lows of Asia session here. Already been swept. So, and it's also failed to break. That's what I forgot to mention as well. So you're waiting for a sweep of Asia low or a sweep of Asia high. It's a swept Asia low. I'm expecting price to try and take out Asia high on this move now, okay? So I'll let this play through and we'll see if we can close above this. Waiting. I might have to speed this up a little bit, damn. Waiting. It's a patient game. Bang. That's what I wanted to see. That's it. You can see here, previous close of market was there. It's already closed above there. All right. So we can tell this is my area that I'm looking to buy now. I think market will react to this. So I'm going to drop to a 5-minute candle. See what the 5-minute candle has to offer. And would you look at this? What, I've just seen it. What can someone see around this area? We can see the best confirmation there is. I'll get my box tool and I'll draw out my fair value gap. Okay? And from this fair value gap, I'll be waiting for an entry. I'll have my stop loss here, this here. I'll pull it a bit below where my area of interest is, about there. And then I'll probably aim for liquidity. Probably just aim for liquidity. Because I'm not sure, market's reacting a bit funny around here, but it has closed above. All right, let's have a look. Unbelievable. Unbelievable. Now what some people are forgetting to see here is they've only spotted a fair value gap. That's it. Everyone missed the order block that was also contested and not closed with inside. So a respect of a order block or fair value gap will be the wick coming inside, price rejecting from that point because it has filled that gap, and then it would close outside of that box. If this would have closed inside, never taking the trade, invalid. Therefore, I'm expecting a breakthrough and an inverse fair value gap. Okay, so yeah, that was a trade that I took yesterday. I can even pull out my phone right now, jump on MetaTrader 5, and I can show you. Yesterday, where is it? I don't know if you guys will be able to see that. That was yesterday. So 14 profit this month. Oh, but yeah, it's a continuous trend of trying to find which way the market wants to push, why it's trying to push that way, and then finding your entry point, which is your confirmations. And then yeah, for me, that was obviously enough to trade off of. And yeah, actually, liquidity was taken there. You know, I probably, after that trade, I actually logged off, but that's like a small example of trading. So here, I'll show you, we have market pushing upwards. Uh-oh. So what do we have here? We have got higher highs. Can I draw on? Oh, I can draw on that. I know I can, but I don't know what the tool is actually. Scrap. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, lower highs, lower lows, lower highs, lower lows. Okay? So you would normally get your inverse value gaps with a reversal, and you will normally get your fair value gaps with a continuation. Simple as that. Simple as that. Fair value gaps will fall around these areas on the pull down. No, they won't. No, they won't. They'll fall around. Fair value gaps will fall around here where market will pull down. Sorry. And then inverse value gaps will do the same on the inner sections where market will pull up. Come on, man. All right, so journal everything that I've just said. Everything that I've just spoken about. Be smart with your trading, set up statistics, go watch TJR's bootcamp. I don't care what people think about TJR, okay? Go watch his bootcamp, because as much as people think that he's a core seller and he's a bad trader, he's up every single month, okay? Every single month he's in the green, no matter what, as well as that video is educational as hell. I know it's gonna be more educational than this, but that is everything. One last thing is journal your trades. Okay, so I log all of my trades. My book currently run out, so I'm using online now. But normally I would write them down. Either or is fine. Just make sure you have a recollection somewhere. So if you do lose a trade, or you see a setup that you have currently been through before, you've already got it written down. You know what's gonna happen. Okay, so that was a little lesson for you. If anyone is curious about anything, please do not be afraid to drop my Instagram a message, Bonzo FTP, same as my YouTube, and I will always reply. I'm not that famous, so yeah, give that a look. If you like the video, like and subscribe. Really trying to build something here, but yeah, this video, this half-an-hour video, will have my whole knowledge of 2 years of trading. That's crazy. All right, there we go. There we go. Enjoy, guys. Enjoy.